Welcome to the deep dive. We're here to pull out the key insights from, well, stacks of information. Today, we're digging into VST Industries Ltd, specifically their financials for the quarter ending June 30th, 2025, so Q1 FY26. We're working from the official unaudited results they filed with the stock exchanges and also their press release, and both came out today, July 22nd. Our goal here isn't just to read numbers, it's to unpack what's behind them, the strategy, the market, what it means for you. And the first thing you see is this headline: strong sequential growth for a tobacco company, plus strong volume recovery. So yeah, that definitely makes you pause and think, okay, what's really going on here? Let's get into it.
It really does. It's a headline that invites a closer look, doesn't it? Because on the
Yeah.
surface, well, things aren't always what they seem.
Exactly. So let's start with the big picture numbers for the quarter. Total revenue from operations, gross, was 441,214 lakhs. Okay, so that's 412 crores according to the press release figure.
Right. 412 crores.
Now, here's where it gets interesting. That 412 crores, well, it's actually down from the previous quarter, Q4 FY25, which was 453 crores. And it's also down compared to the same quarter last year, Q1 FY25, which was 423 crores. So how does that square with strong sequential growth? Seems like a contradiction. Are they just, spinning things?
That's a fair question. And it's not really spin, but it is specific. That headline isn't talking about the total overall revenue figure. It's zeroing in on the performance of their main business, cigarettes, and also some key profit numbers. You see, VST has different revenue streams. And while one part did really well, another part struggled, which pulled down that total number.
Oh, okay. So different parts of the business telling different stories. That makes sense. So if the total revenue dipped, what happened to the bottom line? Let's look at profit after tax, the PAT. For Q1 FY26, it was 5,613 lakhs. That's 56.1 crores. And this number is actually up sequentially, about 5.8% higher than the 53.0 crores in Q4 FY25. And it's also up year on year by 4.7% from 53.6 crores in Q1 last year.
Right. And that PPAT growth, especially when the top line went down, is actually quite significant. It strongly suggests they've gotten better at managing their operations, maybe cutting costs or possibly shifting their sales mix towards products that just make them more money. Seeing the bottom line improve like that, despite lower overall sales, well, it points towards some effective management. Yeah.
Okay, so profitability up, total revenue down. The clue, like you said, must be in breaking down where that revenue came from. The press release really highlights the cigarette revenue, says it's up significantly, 10.1% sequentially. So 371 crores in Q1 FY26 compared to 337 crores in Q4 FY25.
Yeah.
And interestingly, it's the exact same 10.1% increase year on year, also from 337 crores in Q1 FY25.
Precisely. That's the core engine firing well.
And that revenue surge lines up perfectly with their cigarette volume numbers. The average volume per month in Q1 was 714 million sticks. That's a solid 10.4% jump from the previous quarter, and an even slightly better 10.9% jump from last year. So clearly a win in their main business. But what does volume recovery really signal in this kind of industry, the tobacco industry?
Well, for a company like VST, seeing that core cigarette volume bounce back strongly it's pretty positive. It suggests demand is picking up again. It means their strategies in the market are working, their brands are connecting. In an industry that's always facing pressures, regulatory and otherwise, seeing volume growth like this, it could mean they're grabbing market share. Or perhaps they're benefiting from what management called those early tailwinds of a rural recovery. It fundamentally points to the health of their primary operation.
Okay, that makes sense. But then there's the other side of the revenue picture, unmanufactured tobacco. And here, the story is completely different. A really sharp decline. Only 41 crores in Q1 FY26. That's way down from 116 crores just the previous quarter, Q4 FY25. And also down from 86 crores in Q1 last year.
Yeah, that's a significant drop. And it certainly raises questions about, the balance within their overall business mix. Management, specifically Sanjay Wali, the whole-time director, did mention demand stress affecting this particular segment. Although it's worth noting, he also said they expect it to recover later in the year. So you have this contrast. Cigarettes booming, unmanufactured tobacco slumping. And that explains the dip in the total revenue figure we started with.
Right, the pieces are fitting together now. Let's look at EBITDA and margins, because these numbers really underscore that profitability story. EBITDA came in at 77 crores for Q1. That's up 10% sequentially and 5.5% year on year. Pretty solid growth there.
Solid indeed.
But the EBITDA margin is maybe even more impressive. It jumped to 26.0% in Q1. That's up, get this, 610 basis points sequentially. That's a massive 6.1 percentage point increase from Q4 and up 310 basis points from last year.
That kind of margin expansion is really something, especially when you remember that management specifically called out abnormally high raw material prices. It suggests they're doing something very effectively. Either they have pricing power they're using, or they've found significant cost savings, or maybe a combination. To push margins up that much while facing cost headwinds, it really speaks volumes about their operational control.
It really does. Now, there's one more piece we need to address to get the true picture of operational profit. There was a big exceptional item this quarter. The company reported a net gain of 10,049 lakhs. That's from selling a property. And there was a tax impact on that gain of 8,688 lakhs.
Yes, and it's crucial to separate this out. This gain massively inflated the reported profit before tax, making it look like 10,049 lakhs. But that number includes the property sale gain. The profit before considering this exceptional item and tax was actually 7,599 lakhs. So for you, the listener, it's important to recognize that exceptional gain is a one-off thing. It doesn't reflect the ongoing core business performance. That 7,599 lakhs figure gives a clearer view of that.
Good clarification. So pulling it all together, how did management frame this quarter? Sanjay Wali called it an encouraging start to the year, really emphasizing that strong volume recovery in cigarettes.
Which aligns perfectly with the numbers we saw.
He also mentioned that the efforts they've made over the last couple of years to rebalance the portfolio are now starting to show traction. And he pointed to things like better micro-market execution and those early tailwinds of a rural recovery as positive factors.
And that's really interesting, isn't it? You can draw a direct line from those strategic comments, portfolio rebalancing, better execution to the actual results. The cigarette volume growth, the margin expansion, it shows their plans are actually translating into tangible financial improvements. It's strategy in action.
Definitely. But they weren't just painting a rosy picture. They acknowledged challenges too. Those abnormally high raw material prices are still a headache, apparently.
Right, a persistent issue.
But their response, they talked about rationalizing our cost structures and putting great emphasis on innovation and digitization.
And those actions, tightening the belt on costs, pushing innovation, are almost certainly what helped them achieve that impressive EBITDA margin improvement despite the high raw material costs. It shows they're actively managing the pressures. And again, they did reiterate that they expect the unmanufactured tobacco segment to bounce back. So they're not writing it off.
Okay, so that's the quarter in detail. Maybe we should step back for a second. For you, the listener, who exactly is VST Industries? Well, they've been around a long time. Incorporated back in 1930 as the Vizier Sultan Tobacco Company Limited. Over 90 years of history.
A long history indeed.
Their main business is, well, making and selling cigarettes and also dealing in unmanufactured tobacco leaf. They're a major player. And their reach is quite something. Their products are apparently in about 10 lakh retail outlets across India. That's 1 million shops, which they say translates to over 80% market penetration. That's huge.
It really is. Massive reach.
Plus, they have strong brands. 2 of them, Total and Editions, are apparently among the top 10 cigarette brands in the country.
And that market reach, combined with strong brand recognition, that's the foundation, isn't it? It provides the platform for that volume recovery we talked about. It gives them the muscle to execute their strategies effectively in the market. It's a significant competitive advantage.
They also work closely with farmers, over 15,000 of them, sourcing over 20,000 tons of tobacco. And they mention a commitment to sustainability, things like promoting renewable resources. Their factories are in Hyderabad and Tupran in Telangana.
And just to tie it all together neatly, financially speaking, they operate as just one single business segment, tobacco and related products. So all these numbers, all this performance, it reflects the combined results of everything they do within that tobacco space.
Right. So this deep dive really shows a company navigating, well, a pretty complex market, wouldn't you say, with very specific strategies. We've seen that strong comeback in their core cigarette volumes, really impressive margin growth, but also managing those high raw material costs and dealing with a totally different performance in the unmanufactured tobacco side of things.
Absolutely. It's a fascinating picture of strategic adjustment meeting market forces. You see the push and pull. And it leaves you with a really interesting question to think about. As VST keeps working on rebalancing its portfolio, as they put it, and keeps pushing innovation, how will that long-standing strength, that huge market penetration in cigarettes, shape their future? Especially if, as they hope, that unmanufactured tobacco demand does recover and maybe raw material prices ease up a bit. It's a compelling case study, really, of how even a very established player in a traditional industry adapts and evolves.